This is Boom Bust. Here are some of the stories we're tracking for you today. First up, Senator Rand Paul pledges to block Janet Yellen's confirmation as Fed chairwoman without a vote on his bill to audit the Fed. We'll tell you all about it coming up later on in the show. And there's some big-time CEO drama over at Blackberry as the deal to buy the besieged company has fallen through. And later on, we sit down with Duff McDonald, the financial journalist, with the inside scoop on one of the world's most secretive businesses. That's right, we're talking about McKinsey & Company. The consultancy firm has had a hand in everything from Enron to the latest presidential election. That's quite a plethora. And finally, with all this action, I bet it makes you kind of want to lie down and take a nap. And that might be the best thing for you to do. In today's Big Deal, we'll explain why that might actually improve your productivity at work. But now, let's get to the show. Janet Yellen, President Obama's nominee to replace Ben Bernanke as Fed chair, has started meeting with senators ahead of her November 14th Senate Banking Committee hearing. However, there's one senator she's going to have a tough time getting on her side, and that would be Mr. Rand Paul. The Kentucky senator says he'll block Yellen's nomination unless Senate Majority Leader Harry Reid holds a vote on his bill designed to audit the Federal Reserve. Now, Senator Paul recently spoke to Bloomberg about how successful he believes this gambit will be.
Apparently, Janet Yellen's been in favor of transparency at the Fed. That's all we're asking for is an open audit a year after the fact.
How about Yellen per se? Will that nomination be approved this year? Will you be able to hold it up? Will you filibuster it?
In the old days, you could place a hold on and keep it forever. Even if I stand on the floor and filibuster in a personal fashion, I can only hold it up for 2 days.
So she's going to be confirmed?
In all likelihood, yes, but I want to draw attention.
There, now, you heard it yourself from the Fed agitator himself. In all likelihood, we'll soon see Yellen as top dog at the Federal Reserve. Elsewhere, big U.S. banks are breathing a sigh of relief following a recent rally in the price of treasuries, which brought the yield on the T-note back down to 2.6% from yields around 3% earlier this year. Now, the spike in treasury yields back in June was a result of the Fed simply murmuring the word taper, causing banks to suffer billions of dollars of paper losses. But things are looking sunny again as big banks recovered $8 billion in unrealized gains. So for all you investors out there, the drama endured over the past few months seems to be settling down. But don't get too comfortable, because taper talks are bound to happen at some point in the near future. And Larry Ellison is the third richest man in America and the highest paid CEO of any public company in the entire world. But Oracle shareholders are trying to change all that. Now, for a second consecutive year, the majority of Oracle shareholders voted down Ellison's almost $80 million compensation package in a non-binding resolution at the annual shareholders meeting. Now, the shareholders' agreement, well, that is that the technology company's stock has plateaued, especially relative to competitors like Microsoft, which has seen growth, while smaller upstart companies have eaten into Oracle's market shares as well. Now, 57% of shareholders voted against the say-on-pay measure. Sounds like a close one, right? Well, Mr. Ellison owns a quarter of the company's shares, so if you take out his and the rest of the company's directors' votes of a full 85% of shared votes against the pay package. That seems a little concerning. Now, despite concerns about executive pay, shareholders still re-elected Oracle directors. That's kind of incredible. Debate is sure to rage on over this CEO and what CEOs owe their shareholders. Well, there you have it. Those are some of the headlines we're tracking for you today, when, as always, we'll be keeping you posted on all the latest events. Say goodbye to the CEO of Blackberry. Monday morning, the company announced Thorstein Hein's departure. Now, this comes as takeover talks from Blackberry's largest shareholder, Fairfax Financial Holdings, fell through. And instead of Fairfax buying and taking it private, the mobile communications company announced it would receive $1 billion from Fairfax and other institutional investors. Wall Street isn't having any of it. BlackBerry shares, they plunged 16% on the news that the buyout crumbled. And the smartphone maker used to be the top dog, but he fell in popularity to competitors like Apple and Samsung. Sales of the latest BlackBerry phone, the keyboard-free Z10, were dismal at best, and the company had to write down nearly $1 billion in inventory. So what happened to BlackBerry and what's next to discuss? I am now joined by Kyle Harrington, founder of Harrington Capital Management. Kyle, how are you doing today?
I'm well, Aaron. How are you?
Good, good. Now, first and foremost, why did BlackBerry's takeover by Fairfax fall through? What's the details behind that?
Well, I think that there's hesitation from Fairfax, would be my suspicion, of the difficulty of taking BlackBerry private and then figuring out valuation and long-term liquidation of the company. So I think in this situation what they've done is they've basically put forth a $1 billion loan at a 6% interest rate, which is a reasonable interest rate in this environment. And then their convertible debentures would be convertible into the equity of the company going forward. And I would suspect that in the public markets right now, before the Fairfax jumped into the mix, there were other private equity firms like Cerberus that were very interested in this company. So I think they're going to take a position in the company, earn an interest rate, and then I think look at some of these other companies like Cerberus to see what they do now that BlackBerry is now open to take out other investments.
Now, Kyle, Wall Street has not responded well to the news of this takeover falling apart. What are the benefits and drawbacks of Fairfax investing $1 billion into the company rather than just taking it over?
Well, I think that here, Fairfax gets a rate of return on their investment versus just being an equity holder. So they have some security against the money that they've put up. And taking it over, is a big, is a difficult thing to do and take private. And remember, this company is a Canadian-based company. So the rules will be slightly different in a takeover situation than they would be in the American marketplace, and from what I understand, a bit more difficulty in the regulatory environment. So I think that all of that together, regulatory issues as well as compliance issues in the Canadian marketplace, maybe leaned Fairfax to being more of a convertible debt holder, earning an interest rate on their debt, and then staying in the public marketplace.
Now, obviously, like we mentioned before, it was announced today that BlackBerry CEO Thorsten Heinz will be leaving the company. But Mr. Heinz's contract included a payment to the former CEO worth at least $33 million if the company was acquired or if he was fired. Now, the question is, do you think that he had the right incentives to turn the company around in 2013 after the dismal sales of its latest line of phones, the Z10 and Q10? I mean, the incentives seem backwards there. You're going to make a lot of money either way, sir, so good luck. What does that seem like to you?
Yeah, exactly. I mean, one of the first things you learn in business school is you got to make sure that senior management's interests are aligned with shareholders. And, that's a great question. Whether he does or doesn't and he earns this pool of money, I mean, it's, it can be a very simple decision. So I don't think that they were aligned properly. And part of it, I think, answers the question of, why BlackBerry hasn't innovated their products as much as an Apple or a Google has. And it has been a fall, they have fallen behind pretty significantly. I mean, I'm still a loyal BlackBerry user because I like the email system, and I think that a lot of folks in corporate America and the government as well are still using BlackBerry. So I think that there's still significant value there, but they've fallen asleep with respect to innovation, and that has a lot to do with, I think, the alignment of interests with respect to C-level executives.
I mean, if you're going to get paid regardless to what happens, there's not much use in doing anything better. Now, it's rumored that BlackBerry co-founders Mike Lazaridis and Doug Frayne, they could be mounting a serious bid with Cerberus, that's the New York investing firm, along with Qualcomm, the San Diego-based mobile chip maker. Is BlackBerry still in the market? Like you said, like they're falling off, but are they still in the market? Are they players?
You know, Aaron, that's another great question, and I think the answer to that question is yes. I mean, they have a loyal user base, and people, you know, really got used to BlackBerry with respect to email communication, and so the United States government, a lot of folks in corporate America on Wall Street, you know, my area, are loyal BlackBerry users. So I think that when you look at some of these potential suitors like Cerberus and some of the original founders, I think what they see there is some value at the right price, of course. But I think that they continue to see value with respect to the customer base. They just need, I think, they need to get back to the basics and innovate some more products in order to stay competitive, because they've definitely fallen behind.
Now, the dark horse in all of this bidding was Facebook, who is rumored to have taken a meeting. Now, how likely is it, do you think, that Facebook lobs a bid in an attempt to kind of match Google's acquisition of Motorola, especially given what's happened today?
From a strategic perspective, I don't think it would be a bad idea at all, and it wouldn't surprise me if Facebook, in fact, did that in an effort to compete with, what Google has done. Like I said, I think that there is value there with respect to BlackBerry, but I think management interests need to be aligned, and the customer base needs to be excited a little bit more going forward with new product innovation. So it would not surprise me at all from a strategic perspective if Facebook threw their hat in the ring in an effort to acquire BlackBerry.
Kyle, thank you so much for your time and insight. We'll definitely have to have you back on the show in the near future. That was Kyle Harrington, founder of Harrington Capital Management.
Thank you very much.
Coming up, we look at the invisible hand that helps make the big decisions for American businesses. And we're not talking about Adam Smith. We're talking about McKinsey & Company. Plus, Lululemon is having some transparency issues. And we'll discuss all of that on today's Big Deal. Stick around. We'll be right back.
5 seconds. And over the mic is all fueling go.
Did you know the press is the only industry specifically mentioned in the Constitution?
Stand by.
That's because a free and open press is critical to our democracy.
Track Alpha. Roll Alpha.
In fact, the single biggest threat facing our nation today is the corporate takeover of our government and our press.
Stand by, camera 1.
We've been hijacked by a handful of powerful transnational corporations that will profit by destroying what our founding fathers once built up. I'm Tom Hartman, and on this show, we reveal the big picture of what's actually going on in the world. We go beyond identifying the problem. We try to fix it. Rational debate and a real discussion of the critical issues facing America.
Stand by on camera, go.
Ready to join the movement? Then welcome to the big picture.
I'm the resident, and I'm sick of society sucking. I'm sick of corporations trying to convince us to consume, consume, consume. I'm sick of bankers trying to convince us all that life is all about money. And I'm especially sick of our politicians writing the laws and regulations to protect corporations and bankers while they hang us out to dry. There is just too much crap in today's society. Let's talk about that.
I would rather ask questions to people in positions of power instead of speaking on their behalf. And that's why you can find my show, Larry King Now, right here on RT. Question more.
Considered one of the most prestigious management consultancy firms in the world, McKinsey & Company is not only incredibly powerful, but has played a fundamental role in molding American capitalism as we know it today. Started in 1926 by accountant James McKinsey, today the firm Also, McKinsey, better known to those in the know as the firm, employs over 17,000 people and grossed more than $7 billion in revenue last year. Now, over the years, the firm has had some tremendous accomplishments and equally as stunning failures. But joining me now from our New York studio to discuss is Duff McDonald, financial journalist and author of the New York Times best-selling book, The Firm, A Story of McKinsey and Its Secret Influence on American Business. Duff, thank you for being here with us today. Now, I want to start off, how has McKinsey shaped American capitalism as we know it today?
Well, they've been doing it for almost a century, starting with the insight that launched them, which was James McKinsey was an accountant, and he actually created the idea of budgeting as a management tool. You know, instead of just filing your numbers and paying your taxes, looking at them and using it to plan resource allocation. And that's how they got their start. But these days they do everything from efficiency consulting, which can involve layoffs, to strategic consulting, to IT consulting. Any question that the board or management of a big company has about what should we do, there's a good chance McKinsey gets the call in there to help them figure it out.
Now, can you tell us historically, what are some of the most key moments McKinsey has had in shaping history?
Well, one thing they did in the post-depression and post-war era even was to help large companies figure out how to just organize themselves. It's called an M-form organizational chart, but it's the thing that anyone who's worked for a company knows, the sort of family tree org chart. They help disseminate that in the process, helping sort of create the way that companies organize themselves. Another big thing that they were involved in was the creation and dissemination of the whole idea of strategy. You know, most companies spend a lot of their time just focusing on the here and now, and McKinsey and a couple of their peers helped companies start to think about, you know what, you got to do more than just pay attention to what you're selling in the stores today. You got to think about what you're going to do with the future and how to allocate resources for that. So they've been instrumental in doing that too.
And I want to get to that, how they're going to react in the future in just a bit. But first, I want to say, statistically speaking, you know, has McKinsey had more hits than misses in terms of those that they've been advising? We know they were at the helm at Enron, GM, some other pretty epic fails.
Absolutely. You know, they were around when GM sort of ran into a wall in the 80s. Enron was McKinsey was on the scene. Jeff Skilling was ex-McKinsey. Swiss Air, they gave some particularly dubious advice to, which led to its bankruptcy. But these guys have 85% of their business is repeat business, so they clearly have some happy customers. And they're pretty much in the corner offices of the majority of any big companies in any economy of note in the world. These guys are literally everywhere.
Now, they're notoriously secretive, McKinsey, as a company. How were you able to gain access to such a company?
You know, one interesting thing about their secrecy is that as a reporter, it's often hard to get people to say negative things about a subject you're writing about just for fear of reprisal or the fact that people just don't like to be quoted saying negative things about anybody. With McKinsey, it was actually the opposite. Because part of the deal they have with their clients is that McKinsey doesn't take credit for their ideas. It's actually harder to get their satisfied customers to talk about them, because if you're the CEO of some company that used them and made a great decision, you're not about to turn around and say, oh, don't thank me, you know, thank McKinsey, it was their idea. So that was an interesting challenge. But it was just like any other reporting job that you have enough lead time on. You start with a few people, you gather a few straws, and you just see where they lead you. McKinsey offered, in the end, what I call limited cooperation. They came around and gave me access to a few dozen senior partners, current and former. And basically, I got that by showing them that I was out to write a fair book and not just some sort of takedown.
Now, I want to get to this. In 2011, former McKinsey managing director Rajat Gupta, he was convicted of insider trading after leaking privileged information, which he garnered from his position on the board at Goldman Sachs. And he leaked that information to Rajaratnam, at the time was head of Galleon Group, the hedge fund. And at the time, it was one of the largest hedge funds in the world, and they both spent some time in prison. What kind of trauma, if any, has McKinsey really suffered as a result of this incident?
You know, interestingly enough, the Rajat Gupta ran McKinsey for 9 years, so it was a fairly mortifying experience for them. But the specifics of his particular crimes had nothing to do with McKinsey. He had retired from McKinsey. He was selling information to Rajaratnam, or wasn't even selling, giving information to Rajaratnam from his seat on the board of Goldman. So McKinsey was just sort of in his bio. It had nothing to do with that case. What's more interesting is another person who was giving Rajaratnam information was Anil Kumar, who happened to be a partner at McKinsey at the time. And the fascinating thing about that is the fallout from that has been almost nothing as well. I talked to a number of clients of McKinsey, and most of the CEOs of large companies have a certain amount of sympathy for problems like that. You know, they call it the bad apple theory. You know, if you're of a certain size and if you're successful enough, you're gonna have rogues on the payroll. The only question is whether it's systemic or beyond. And apparently their clients don't seem to think that it was a problem with McKinsey, but with a particular individual.
Duff, thank you so much for your time. That was Duff McDonald, financial journalist and author of the New York Times best-selling book, The Firm. Now it's time for today's big deal. Now, in today's big deal, Lululemon Athletic has made a $10 billion business out of selling uplifting women's behinds brands. Yeah, that kind of was weird, but basically selling hot pants that make their butts look better. But last spring, the company faced sheer terror when its famous black yoga pant was recalled after customers complained they were see-through. Yep, see-through. Now, the recall cost CEO Christine Day her job, and now it looks like the hot pants are again in the hot seat. Customers are complaining that Lululemon pants are pilling. Rachel, what's going on here? Is this part two of what we already saw with Lululemon hot pants not being so hot?
Well, in a sense it is, in that people are concerned again. They're like, you know, where's the quality control here if there's pilling taking place? At the same time, the last Lululemon big transparency scandal that we saw resulted in 17% of the pants being recalled. That's a huge amount. What we're hearing this time is kind of on a much more infrequent, almost kind of story basis. Like a couple of people have their own personal takes. They're bringing them to Facebook. The financial journalist kind of seized upon it. The stock fell on Friday and then has kind of stabilized once again today.
So they're back at even, it seems.
Yeah, it seems about they're back at even, and it doesn't seem like it's going to have as big of an effect. What happened in March actually at the end of the year may end up costing Lululemon anywhere from $57 to $67 million in sales. It doesn't look like this new round of pilling is going to be the same thing. Also, I would add on kind of a more personal note, I would rather have pants that pill than pants that are see-through altogether. You know what I mean? I mean, especially because what Lululemon was saying is, why don't you do a test where you look in the mirror, bend down, and see if it's see-through? I've never had to look in the mirror and bend down to check out if my pants are good or not. I don't think that you should have to do that. And
that just seems, you know, if the pants...
It's so obscene. It's like they just are like these really perverted salespeople be like, you better bend over.
Bend over, downward
bend over
dog
and look in the mirror.
Sure
yeah, exactly.
And also, you said something funny earlier when we were discussing this story off camera and preparing for the show. Pilling ain't that bad. You kind of like it on your own sweater, right?
Yeah, I personally don't have a problem with pilling. Though, I mean, okay, so Lululemon, I mean, this is like $70 or $80 for a pair of pants. Now, I personally thought that was totally ridiculous. Still can't really afford it. But in trying on a pair of Lululemon pants, the uplifting effect is incredible. I mean, this is not BS.
Yeah, no,
this is real. This is real
people.
Yeah.
This is real.
And I think that's a reason why this is such a popular brand, because it actually literally has that zoop uplifting effect that people are talking about.
These are not your grandmother's leggings, by any
exactly.
means. Now, you know,
these ain't your grandma's leggings.
These ain't your grandma's leggings. Now, Lululemon, they face competition from a variety of different yoga retailers, but are there any today on the marketplace that are as upscale and desirable and, you know, kind of special when you're wearing it? It's like holding a Chanel bag wearing a Lululemon jacket. Are there any out there?
It is also a status thing, but the major thing that Lululemon did that was really smart was that they actually gave yogis, the people who were teaching the classes, huge discounts so that the people who were trying to mimic their yoga instructor when they did their downward dogs also were trying to mimic what they were wearing. They thought that this is what you have to wear if you really want to do the best salute to the sun. So that was really, really savvy. And Gap is trying to create its own brand of yoga clothes that also employs this method of giving these discounts to yoga instructors. What they think is it's almost going to have the same trickle-down effect. You know, if you give discounts, maybe a lead loss to the actual yoga instructors, all of their young grasshoppers are going to come in and buy those same clothes. They clearly have disposable income if they're taking these yoga classes in the first place.
Well,
so
I don't know how much disposable income I had, but I certainly drank the Kool-Aid and bought the pants that my cool teacher had on. Just because it really is
because they look so good doing it.
They look so good doing it. Now, Lululemon shares, they fell sharply amid these allegations on Friday, but they've seemed to stabilize, like we mentioned before. What's the future for Lululemon? Do you think that, you know, their stock price is inflated and that we're just going to see this go down? Because this is, like you said, an extremely high margin they're making off of pants that probably cost
very little to produce. And clearly, they don't have a lot of people working on checking on the product afterwards, right? They're going to need to hire some new people perhaps for that. But it does seem like Wall Street, to a degree, has decided that this brand is stable once again. They're not as concerned about the pilling as they were about the see-through.
Now, I want to get to this really quick. We don't have much time, but sleeping at work, it's generally looked down upon. We're not allowed to do it. But new research shows that naps can help workers increase their productivity during the day and can actually serve as a substitute for inadequate sleep. Now, I got to ask you, Rachel, napping on the job, do you think it's a good thing? Do you think it's going to be better for society?
Well, it seems like it actually has these incredible effects. People are increasing their ability to take cognitive tests after they've taken a nap. But I do think that there's a huge issue. If I fell asleep at work, people would think that I was being lazy and not doing my job.
Yes.
And would think I was a big BS artist if I said, I'm just trying to be more productive. If
my
I'm
cognitive
lounging,
reasoning will be amazing if you just give
in
me
2.5 hours, So 90 minutes from now, I swear I'll be sharp as a tack. I feel like it's going to take a lot of rearranging how we see the workplace dynamic for that to work. But I will say there are a lot of media companies, like, for instance, Huffington Post, that do have nap rooms, and they've been mocked for it, but this science team seems to support it.
Well, I'm hoping it catches on here at RT.
Yeah.
That's all for now, but you can see all segments featured in today's show at youtube.com/boombustrt. We also love hearing from you, so please check out our Facebook page at facebook.com/boombustrt. And from all of us here at Boom Bust, thank you for watching. See you tomorrow. Bye-bye.